Good afternoon, everyone. Welcome to Hit the Bid here on November 2nd. This is Ty Robbie here with your Week 44 Market Watch. Today we're going to run through our charts and see what happened across the markets over the last week and see what opportunities we have to look forward to as we move into Week 44. So let's jump right in and get started. First up, we got our December live cattle on the board. We did see more volatility hit the cattle market last week, but most of that downside was contained to Monday's action here in the live cattle, and some of that did spill over into Tuesday's action over here in the feeder markets. But for this December live contract, we did see that low put in on Monday, as well as the high of the week. The entire week's range was printed here on Monday, and then throughout the next 4 days, we did just we did see this market just kind of spend some time cleaning up some of that inventory and trying to digest this recent breakdown. At the moment, we didn't see a very strong finish here on Friday. We did see the bears briefly undercut that Thursday's low, make a nice probe down here towards 227.5. We could see this then continue to be range bound with this market digesting this big breakdown. Look for this market to continue chopping here in about an $8-9 range between 225 and 234. If the bulls are able to reclaim this 234 area and get a close back there above that 50, we'll give them a chance to start to climb back up here towards these recent highs. However, it's not going to be an easy climb out of there. This market does have a lot of overhead supply to chew through, so the bulls definitely have their work cut out for them, but above 234 will be a big win for them as we move into next week. In the meantime, we expect to see this market kind of chop up in some wide ranges here while it continues to clean up some of this big breakdown. This market is going to take a little bit of time to climb back out of here. If we do see the bears start to push back down below 225, we could see a retest of these lows and even a potential flush down here towards 220 and even this 200-day average. This long-term support down here at this 200-day average is a good spot where we could see some more bulls try and step in down here if we do get a breakdown to that point. But at the moment, look for this volatility to stick around. This market needs to recapture some of these key levels and get it back above our major averages. And from there, we could start looking at a bull case again. But here in the meantime, I encourage everyone to remain defensive and cautious here while this market tries to find a good base to trade around and find some levels of support before we can pick a meaningful direction from here. Next up, we got our January feeders. Pretty similar action. However, we did see the week's low put in on Tuesday. We did open up on Monday and go limit down pretty quickly there, and then followed by another gap and go there on Tuesday. Briefly testing down there around the 320 mark before rallying into the end of the week. We did see this market kind of chopping up in between Monday and Tuesday's action here as well, as this market is just kind of cleaning up some of this leftover inventory from this big breakdown. At the moment, volatility is still elevated, and we expect to see some wide ranges continue to trade from here. Like those live cattle, Friday's action wasn't super constructive from a bullish standpoint, so look for this thing to continue chopping up in some wide ranges. Continued breaks down here below our bear pivot at 326.82. We could see a retest of this 320 area and potentially this 200-day average as well. In the meantime, just look for that volatility to stick around. Encourage everyone to be defensive here as well. This market needs to recapture 340 and chew through this big breakaway gap that we saw from last Monday's open. And above there, we need to recapture some of these major moving averages. Until then, we still want to encourage the bulls to be defensive and remain cautious here while this market needs to create a nice base to trade around. So look for the volatility to stick around in wide ranges. Let this market kind of clean up and provide some good trading points before we commit to any more upside. We still have a lot of overhead supply to chew through, but at the moment we are seeing this market kind of slow down, and as long as we can maintain this 326.82 level this week, we should see the bulls try and put some pressure up on this 340 level and try and come back and fill this gap. Next up, our December corn futures put in a nice bullish shape last week. We did see this market this market has been stuck in about a 20-cent range here over the last few months. We did see a brief probe down here below the $4 level, but a lot of our action over the last few months here has been maintained to this 410 to 430 area. We can see this range here between 410 and 430 where we've seen a lot of this market kind of chopping up, not a whole lot of big directional moves, just a lot of sloppy action while it's churning up around these major moving averages. Last week we did see a nice break push above this bull pivot, closing that gap, the top end of that range, closing this gap, and having a nice little bullish breakout. We did see this market retreat a little bit here Thursday and early Friday. However, it was a nice little recovery, finishing last week up there at 431. That's a close above. That's a weekly close above this prior range. This looking like it might be a little bit of a reload from the bullish standpoint, as this market did have a nice break from this 410 all the way through this 435 area over the course of 2 to 3 weeks. And so this is just might be a little bit of a pullback here, reload, pick up some of these bulls as these moving averages are starting to flip and climb back up out of here. If the bulls are able to get some early bids above 432 here, we should see a nice bullish uptrend as this corn market is going to start climbing up here towards this 450 to 455 area and retest this prior range we traded in from about March through June of the year. So look for the upside to continue. However, if the bulls aren't able to get any traction here above 432 and we do see this market start to slip back down below last week's low, we could see this thing kind of retreat and get back into this range bound action. And as price has been pretty sticky here between 410 and 430. So look for the bulls to try and get an early push out of here and get an uptrend going. But if not, look for this thing to retreat back into the range. Next up, we got our crude oil futures on the board. We did see an early breakdown last week as we did see that prior Friday's rejection up there, that 50-day average. Monday and Tuesday's action showing a nice breakdown there below Friday's low, pushing all the way down, briefly undercutting the $60 level as the bears did get a nice little break off that 50-day moving average. However, there was a lot of volume that pushed this market up out of here, and we did see Wednesday through Friday's action kind of churning sideways here and even get a little breakout higher here on Friday above those prior 2-day highs. This market running into some little leftover demand from this big volume day, it looks like. However, the bears are still in control here as long as we maintain this market below that prior week's low, or excuse me, that prior week's high. If the bears are able to hold this thing down here below this 50-day average and show some more resistance up here in the low 60s, look for them to start pushing back down here towards the mid 50s. However, if the bulls are able to get back up here and get a close above 62.59, we could see a nice little run back up here towards the mid 60s and get stuck back in this $60 to $66 range that we had traded in throughout the August and September months. So those are our bear and bull pivots for the week. They need to get some traction down here below that prior week's low to see this downside to continue flush down here towards 55 to 56. But a close above this 62.5 area will have a nice little pop back up there towards 65. Next up, equity markets had a pretty quiet week, pretty choppy here across each of our indexes. The Dow, NASDAQ, and the S&P also all seeing some good choppy action throughout the entire week last week. We did see the Fed cut rates once again, just a quarter basis point cut last week as this market continues to push up into new all-time highs. Not a whole lot of resistance here at the moment. This market did kind of pull back a slight bit over the last 3 days of the week, but nothing major. Still trading above these major moving averages, showing good supportive action here around the 68.40. If we do see the bears cut down here below 68.43 in the week to come, just look for them to test some of these moving averages and pick up some more buyers down here. Dips are expected to be good buying opportunities. This uptrend is rolling. We expect to see these higher prices continue into the end of the year. If the bears are able to, if the bulls are able to get some early bids above 69.18 this week, we should see 7,000 print before week 44 is over. So look for the upside to continue across each of our indexes. The market remains strong and healthy. Stay long and strong here and let this market ride here into the year end. That's all we got for this evening. That's all we got for week 44's Market Watch, that is. And thank you everyone for tuning in. We'll catch you guys tomorrow night for closing comments.